The stock market 2019 was one of the most best performing stock markets that I personally ever have seen and witnessed. So we can be very happy about those gains. And the 5 big takeaways from this year, all about it here in this vlog.
Wolf of Dubai.
So I want to start with the Federal Reserve Bank in the US, because this is one of the most single reason that the stocks gained. Now, they are the Federal Reserve Bank of the United States of America, which means that they decide how much percentage a bank or a corporate can take loans off the institution and then invest into the economy, into machinery, into, give loans to the consumer back end and so on. So you see how important this role is. And there was a big controversy between the Fed and the US government, because in the end, the US government cannot control what the Fed decides or the Fed does. That's why Trump says it, for example, this way.
8 increases in total, which were, in my opinion, far too fast an increase and far too slow a decrease. Because remember, we are actively competing with nations who openly cut interest rates, so that now many are actually getting paid when they pay off their loan.
Now, the most single thing is that Fed did something last year, which was a turning point, I believe. About towards the last 2 quarters, the Federal Reserve Bank said the economy is good, which was, I think, a bad interpretation of the data that they received, and then they raised the interest rate, which was a debacle. And last year, towards the end of the year, the S&P even went down 20%. So you can see that just by tweaking a bit the interest rate by the Fed, they could cause a recession. So this happened, and then what happened next is just a downgrade of the interest rates. And this is the most single mechanism that the government has to steer against the downturn of an economy that we might have seen now in the last couple of weeks, and that we will see further down the road, most probably. If it's really a big recession coming on, we don't know, nobody knows, but definitely the Fed has a huge mechanism to stimulate the economy, and that's for also the stock market, because when the money is cheap, then you can invest into stocks and other opportunities out there, not only the consumer, not only the corporation, but also the banks. So all in all, if cheap money is available, then cheap money goes also in the stock market to make it more. So pretty simple. Let's dive to number 2. Another thing that many people are seeing right now are corporate buybacks. Now, what does it mean? This means that corporations on the stock market, they have available funds through cheap money, for example, or through profits, and they buy back their own shares, which means there's less shares on the market of the company available, and the stock keep on rising. Now, big companies like Apple doing it, other companies doing it as well, and it's a kind of a trend, especially with the cheap money of the Fed already in the market. And with approximately $480 billion buybacks, this is a huge number for 2019, especially compared, if we are comparing it to the 2017 number, which was 288 billion, so almost double the number of buybacks that we have seen this year. Now, on the other hand, if we compare it to other years, it is not so huge. Now, for example, in 2016, we had $677 billion, so way up, almost 200 billion more buybacks. So why the companies are slowing it down? Now, there's slight hesitation, I believe, by corporations when they now further buy their stocks back, because the uncertainty that is on the market, how the economy will evolve, they don't want to lock up all their available funds into their own stock, which they might need to compensate some cuts in their profits or some turnover and finance their overhead. So that's just the one single reason I believe that the stocks buyback is going further down than in the next year. So we might have seen that this stimulus, other than the federal bank with the low interest rate, will further stimulate the stock market in 2020. The buybacks maybe roll a little bit down, so that might be not that great as it was in 2019. The trade war was one of the single most uncertain factors that influenced the stock market this year. It was absolutely ridiculous. I think there was no other time that the US president could influence the market, the day-to-day trading, by tweets sending out to the public and influence the market going up 2%, down 2%, up 5%, and so on. This was absolutely crazy. Now, the trade war actually came to the first phase deal on the 13th of December, which was fantastic. After 526 days, we had an agreement between the both most interesting economies in the world, US and China, and there was so many interesting things that happened. You know, we have seen that countries cannot go in war with really, let's say, traditional warfare methods, but also with economic factors, which was quite interesting. Now, obviously, this was always a very constant uncertainty factor, which as an investor or stock market participant is very, very bad, because, you know, what people don't like is uncertainty. And especially the mindset with stocks is that you can lose tomorrow 20-30%, which is, you know, very, very unlikely. But these people are getting really scared easily, especially the retail investors, by negative news, especially by the governments, which should usually give you certainty that there's, you know, the economy goes and grows over time. And therefore this was a big uncertainty for the market in 2019, but should get better in 2020. So this should be a little bit a positive sign moving into 2020. Now, if you are looking back to a year, then you usually look how the market performed. Now, the usual or the general assumption is that the S&P 500, the index of the best performing 500 US companies out there, is the market. Now, this is not really true, because the overall stock and finance market is much more, because we have also commodities like oil, gold, we have also bonds, of course, we have international financial products like stocks, like we have German stocks, we have European stocks in general, we have Asian stocks. So, you know, the S&P is just a small piece, but by the best growing and strongest economy worldwide, and that's where this is taken, especially in the US, as benchmark how this year went. And with 30% gain, this was one of the best stock markets that I have ever seen and experienced myself. Obviously, there was a couple of years or many years back this kind of performances. We are diving now totally into it. So, first of all, by historical means, we had a quite similar year, 2013. The 2013 we grow about 29.6%, so very similar to this year. And the other year, now hold your horses, because the other year we had approximately the same gains in 1997. So this is quite a long time. So you see how good this year really was. Now, people are asking, now what happened after such a great year? Does everybody sell in the next year? Does it continue? Does it get even better? So historically speaking, if you're looking into the next year, so 2014 we had 11% gain, and 1998 we had about 20% gain. So after 30% gain we had 11 and 20 respectively. So So you can see that actually the next year after such a good year is more so let's say this way, if we had a great year, most probably, just considering history, I know this is a very, very strong statement in terms of, hey, what happened then should happen there, but actually it's not, so don't take it as a fact. It's just like an indicator, and that's why after a great year usually follows a good year, at least with like 10, 12 until 20% gain. So this all depends obviously of political factors, cooperation factors, as well as governmental factors. And the last point I want to talk about with you is your own mistakes on the stock market 2019. And I know if you're a beginner or you are pro and very long on the stock market, even you make mistakes. And I think it's very important to look into your mistakes and write them down. What do you think was wrong, so you don't make these mistakes again, because the mistakes yesterday can just cost you a little bit, but the same mistake 10 years later can cost you really a fortune. So to get a better investor, also subscribe to this channel. If you like this video so far, make sure to smash the like button as well. Now, I want to start this last point by showing you that also I do mistakes on the stock market. And just recently, this was it was just the one mistake I did, actually, to be very frank, but it was something that I really, really looked into it in deep detail to make sure that this don't happen again. So, as you know, I'm a Tesla investor, and this story is about Tesla stocks. So actually what happened is I'm a long-term investor, so I actually don't care about the day-to-day gains or lose or about the stock movements in general about Tesla. But what happened was that when the Q3 was so surprisingly good, the stock the next day gained 20%, and then on a Friday gained another 10%. So I was like, if a stock just in this short period, especially a very volatile stock like Tesla, grows that much, the week after or the days after the weekend will be slower. But I said, I don't care, I'm a long-term investor, so I keep on my money invested. So what happened the next week, the stock went down 6% overall, which was, heartbreaking a little bit for me, because I said, okay, if I would sell it and left the 6% off the table, then I could buy more shares now this week. But, I said, okay, long term, the stock will go up anyway, in my opinion, and that's why I stayed inside the stock. Now, what happened next was actually the stock raised and raised and raised. So I was right in the end for my fundamental statement, but what happened next was a bit of a greedy move. Now, imagine that the stock went up and up to 390, which was, I think, a new all-time high. And I said, like, usually when this happens, the stock bounce sometimes a little bit off, maybe 2, 3, 4%, and go back up, maybe if the economy is fine. So I said I will sell a little bit of stocks and then reinvest after a small kickback. Now, what happened is the kickback didn't happen, so I lost like 2, 3, 4% of potential gains. Like, I didn't lost physical money, but I left gains on the table because I was too greedy. I thought like I can make some extra money, some extra buck, and I was directly punished by the market. And looking back on it, it was greed, obviously. Second, I went directly back into the market, so I'm totally invested in this position overall back into the stock, but I left a couple of gains on the table. I also didn't encounter much of the overall market, so I should have seen that when the once uncertainty that is so bad for the market in the last couple of days and weeks and months, the trade war was just finished, so there's a lot of uncertainty was taken away from the market, and therefore the market just of keeping up, all the stocks went up and also Tesla went up, so that's why it was a mistake, and I wrote it down, I analyzed it very detailed, so to make me a better investor every single day. Thanks for watching, and see you tomorrow.